understanding credit scores and how to improve them. Welcome back to How to Be Debt Free. In today's video, we'll be discussing an essential aspect of personal finance, credit scores. Understanding credit scores is crucial as they play a significant role in your financial life. We'll also explore effective strategies to improve your credit score. So let's get started. First, let's understand what a credit score is and why it matters. Your credit score is a 3-digit number that represents your credit worthiness. It is used by lenders, landlords, and other financial institutions to assess your ability to repay debt. The higher credit score generally indicates a lower risk to lenders, making it easier for you to qualify for loans, secure favorable interest rates, and access other financial opportunities. Now, let's dive into the factors that influence your credit score. Number 1. Payment history. This is the most significant factor in determining your credit score. It reflects whether you have paid your bills on time, including credit card payments, loans, and other debt. Number 2. Credit utilization. This factor measures the percentage of your available credit that you are currently using. It's recommended to keep your credit utilization below 30% to maintain a healthy credit score. Number 3, length of credit history. The length of time you have had credit accounts is also considered. A longer credit history generally has a positive impact on your credit score. Number 4, credit mix. Having a diverse mix of credit accounts, such as credit cards, loans, and a mortgage, can positively influence your credit score. However, it's essential to manage them responsibly. Number 5, new credit inquiries. Applying to new credit can temporarily lower your credit score. Multiple inquiries within a short period may raise concerns to lenders. Now that we understand the factors influencing credit scores, let's discuss strategies to improve them. Number 1, pay your bills on time. Consistently making on-time payments is crucial for maintaining a good credit score. Set up payment reminders or automatic payments to help you stay on track. Number 2, reduce credit card balances. Aim to keep your card balances low, ideally below 30% of your available credit limit. Pay off outstanding balances as much as possible. Number 3, build a positive credit history. If you have limited credit history, consider opening a secured credit card or becoming an authorized user on someone else's credit card. Responsible use of these accounts can help establish a positive credit history. Number 4, avoid opening unnecessary accounts. Be cautious about opening new credit accounts unless necessary. Each new account creates a hard inquiry and may temporarily lower your credit score. Number 5, monitor your credit report. Regularly review your credit report for errors or discrepancy. If you find any, dispute them with the credit bureaus to ensure accurate representing. Number 6, be patient and stay consistent. Improving your credit score takes time. Be patient and remain consistent with your responsible credit habit. Remember, improving your credit score is a journey that requires discipline and patience. By understanding the factors that influence your credit score and implementing these strategies, you can take control of your credit worthiness and open doors to better financial opportunities. Thank you for watching today's video on understanding credit scores and how to improve them. We hope you found this information valuable in your journey towards financial success. Don't forget to like this video, subscribe to our channel for more personal finance tips, and share with others who may benefit from it. As always, stay tuned for our next video.